Welcome investors, and thanks for joining us on your Investment Advisor channel, where we decipher the markets so you can take actionable investment steps. I'm Jake Ackerman, an educator, financial advisor, and a founder of a firm with over 30 plus years of wealth management experience. Let's take a look at what's happened in the market. Stocks rise, bonds rise, rates decline, and SVB Bank and Signature Bank are being liquidated. Let's take a look under the hood and what's going on. Why are stocks up? Why are rates declining? And it all has to do with the banks, Signature Bank and SVB Bank. What's going on with the banking sector can tell us what's going to happen with the markets. SVB Bank, Signature Bank, taking a look at their balance sheets and comparing it to the biggest banks, the JP Morgan Chase, the Bank of America, the Wells Fargo. It would take nearly 30 SVB banks to equal one of those. That's number one. Number two, looking at their balance sheets. The balance sheets of SVB and Signature Bank are significantly different than the big banks. Their balance sheet is made up of crypto assets, it's made up of venture capitals, hedge funds, and it's entirely weighted to those three different types of depositors and creditors. The big banks have well-diversified balance sheets, well-diversified into many different sectors, so we can see why Signature Bank and SVB Bank are going to have serious issues. All their assets are in the riskiest environments of our investors. They are in the highest category of risk. So as the rate raising campaign took place all through 2022, they need to raise money. How do they raise money? They have to sell their bonds. Their bonds aren't as valuable anymore. Because the rates have gone up. They're already classified as junk bonds because of their assets that they hold. And when they're trying to raise capital, they have to go and sell their bonds in the open market because rates went up, their bond prices went down. On their balance sheet, it looks like the treasury bills are valued at par value, but really when they go to sell them, they're significantly discounted. So you could see why these Signature Bank and the SVB Bank had a major issue when they tried to sell their bonds in the open market. They just couldn't bring in the value that they needed to raise the capital because of the psychological bank run of their depositors. All right? So what's the ramifications of this, of Signature Bank and SVB Bank? What could happen? Well, we're taking a look at all the other banks with their strong balance sheet. Really, there shouldn't be a serious issue, a systemic issue with the other banks unless it's all psychological, where we see, all right, I seen my neighbor Bill go into the bank to pull out their money. Well, I got to go do it too. So we have a psychological bank run, not a systemic bank run. That's the possibility of what could happen. What we're doing is positioning ourselves that we're going to work ourselves through that. The federal government stepped in and said they're basically going to insure all depositors. So they're going to they're not saying they're bailing out the banks, but they're bailing out the bank depositors in one way. So as a depositor, you really maintain no risk whenever you're open up because the banks have set the standard where they're going to protect the depositors. So that's what we're looking to do. We're looking to overcome this current situation unless it materially becomes worse because of the psychological threat of a bank run. So that leads us into next week because this still is a large issue. What is the Fed going to do? Well, we're seeing the bond market tick up and rates come down. The bond market is starting to price in a dovish Fed who is probably going to either pause their rate raising campaign altogether because they're feared of squeezing the banks anymore, or maybe they hike it 25 basis points. The markets were trying to price in a 50 basis point hike, but it's looking to be completely off the table. So either no rate hike, possible 25 basis point rate hike. Tune in next week. We'll discuss the ramifications and what the Fed said regarding the situation of the banks and what their outlook is of not raising rates as high as they've been necessarily needed to, what ramifications are going to be in regards to inflation. So we'll discuss this next week. Expertise you deserve, experience you can count on. Jake Ackerman.